Let's go first to the risks in markets around two events tomorrow, CPI and the FOMC. A lot of people trying to take account of this risk in the options market. What are we seeing?
Yeah, I mean, this is obviously the time that everyone comes out with their prognostications about how to actually trade these two big events tomorrow. The couple of things that have caught my eye, we're seeing kind of Deutsche Bank recommending looking at TIPS. They're suggesting going short TIPS, that's Treasury inflation protected securities, versus nominal Treasuries. And the reason that they're recommending that trade is that they've noticed that in the day running up to CPI prints, over the last 27 of those prints, which is since the Fed started raising rates, inflation-protected securities have actually underperformed for 22 of those sessions. So they're seeing kind of an opportunity to short TIPS heading into CPI on the expectation that that trend will continue. Looking on the stock side, though, we're seeing JP Morgan expecting basically volatility. And they're saying our base case is that we could see a 1.3 to 1.4% swing in either direction around CPI. But that could get as much as 2.5% if we see a significant beat or a significant miss.
Yeah.
We're expecting to see 0.3% month on month for core inflation tomorrow. So that's really the figure to kind of watch out for. And if we see significantly below that, we could see some pretty chunky losses.
We spoke to Wei Li from BlackRock earlier, and she was talking about the relative merits of European government bonds versus treasuries. This seems to be something of a theme that's building after the sell-off of yesterday.
Yeah, and I think that's exactly it, right? It depends on your entry point. Like, European bonds may not look fantastic right now, but given where they are versus treasuries, they're at the highest yield. So that attractive yield differential has really kind of like grown over the last kind of few days. So now could be a good time to buy, but it really depends on your spot. Obviously, French bonds we saw sell off significantly yesterday, but there are some bigger issues to worry about with France. There are real fiscal concerns there. So some investors, particularly on the European side, are looking more at countries like Spain, for example, where you have much better fundamentals, or they're keeping it conservative and they're thinking more about German bunds, where they can really see some value.